Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Alconin, along with Brianna Valesky. And we have John Carter on the line. He is president of Simpler Trading and CEO of Simpler Options, experienced options trader. John, how you doing today?
Great, Joel, and thank you, Joel and Brianna, for having me on the show this morning.
Okay, so you've been trading for a while, but you decided to put your focus on options trading. What made you decide to do that, and how did you learn about options?
Well, with options trading, I love the additional edge that you get with just the whole idea of premium decay. And by understanding that, you can construct positions in a way that just, if you're normally just trading stocks, say you get X% a year, by adding that volatility decay to that, you can typically double your returns. And it is just something that, once I understood it, it actually took me a long time to kind of figure that out. It just became the best thing since sliced bread. And I had, when I grew up, my father was a broker. In fact, he still is, and he's the one who showed me options trading. And it was interesting. He didn't quite understand how they worked as much, but he's the one who got me turned on to them, and I've been doing it ever since.
And we have a lot of options traders on as well. And the more I learn about them, it's like, you don't necessarily have to be super right, and and super wrong, you can limit your risk. But if a stock just goes nowhere, if you're holding the stock long, you make no money. If you're trading a skilled options position and it sits still, then by selling premium in the correct fashion, you could make money.
Well, the biggest lesson that hit me is I remember taking an options position once I understood how options worked. And I was completely wrong on the stock, on the direction of the stock, yet I still made money. And I was like, all right, that's pretty awesome. And, and that's how I construct a lot of my positions today, where you could say if you think something's going higher, great, buy some in the money calls, but also construct some premium around it where you're selling put spreads and different things like that, so that if it goes sideways, you still make money on it.
And did you just learn this by, the School of Hard Knocks? Was there I know you wrote your own book, but, did you have a mentor, or did you read, or just learn it by doing it?
A little bit of both. I would say 90% School of Hard Knocks, 10%, you read, you talk to other people. But what I've found, at least in my experience, is that I kind of had to try things on my own. I might read a book that says, hey, limit risk, but I wouldn't believe it until I actually learned the hard way that I should limit risk. So I would say definitely, taking what I've learned and then going through the process of the School of Hard Knocks to learn its application.
All right, well, let's talk about some of your positions here. And you've been active in Facebook. And, boy, this stock gave you forever and a brother to get in, really 72, 77, 78, 80 level. Tell us how you played Facebook and what's your plan going forward.
So Facebook is a good example where if you have the right option strategy, that you can actually sit there while the market is trading sideways and make money while you're waiting for a breakout. And, I don't think there's a huge secret to Facebook here. I mean, it's rallied and it's consolidating near its highs for a couple of months. I mean, that's bullish. However, you never know exactly when it's going to make its move. Now, if you're just sitting on the stock, that's fine. You could sit there and make no money for a couple of months, but, you own the stock, and when it does make its move, you can benefit from that. But what's great with options is you can sit there, week after week, month after month, and construct positions in such a way to benefit from sideways movement, plus be positioned for that move higher. And so what I would do is every week sell puts against it and own some. I like to own, if I'm going to buy an option, for example, if I'm going to buy a call, I want to own it at least 30 days out. That gives me the gift of time to kind of work with it, and I don't get a lot of premium decay. But then I can sell weekly at the money and out of the money puts against it to kind of help finance any premium decay in my long option, and at the same time put a little money in my pocket while I'm waiting for Facebook to make its move.
Okay, you also like to play the pharmaceuticals, and nice looking chart here in Jazz Pharmaceuticals. The question is can this thing clear 190 here? high at 190.17, 189.99. Do you have a target on this one? We bolted up from under 170. What you looking at in Jazz Pharmaceuticals?
Yeah, so now Jazz is one of those things where I always say that, if you're going to learn to trade options, start off with a stock like Facebook. There's actively traded options. The spreads are tight, and that's great. When you step into Jazz, it's a stock like Jazz. I call it the price of admission, is the wide spread, the thin volume, and the low open interest. And most books will tell you to stay away from stuff like this. But in my experience, this is where the big moves can happen. And for something like Jazz, so I'm looking at an upward target of $212. And the way I look at this is that when you have a stock like this where the spread can be $1 wide, well, if you're only trying to catch $1 or $2 on the stock, that's not going to work. But if you're catching $20 or $30, then fine. I'll let the market makers have that dollar spread, and I'll keep the rest.
Okay, and so you got a target above the current area, so you're holding on to that. Another stock that you mentioned, Ambarella Inc., and they are tied, I believe, to GoPro. And boy, it had a nice move off earnings, pulled back. Looks like it almost filled the gap. Consolidation, another blast higher. You holding on to your Ambarella?
Yeah, so for Amba and for Jazz, I'm playing them the same way. I call them both honey badger stocks. And what that means, I don't know if you've ever seen the YouTube video, the honey badger don't care.
Yep.
And these two stocks don't care what the market is doing. They're just going to do their own thing, whether markets are going up or down. And with these kind of positions, the hardest thing to do is just sit on your hands. So I'm a big believer in scaling out as a position goes your way. So at this point, with both Jazz and Amba, I've got about a third of my position left. So now I've taken some money off the table, and I'm able to manage these last thirds of the positions a little bit more relaxed. So, and when I do that, what I typically do is I'm selling the long position. So if I've got, say, 10 call options, and I've got 10 put spreads, if I'm scaling out, I'm typically just selling those calls because the put options are generally at that point worthless anyway. But what happens is it just makes it so much easier to manage the position. And it's a lot sexier to hold on to a full position for a full move, but we've got to realize that we have no idea what's going to happen next. We may wake up to a downgrade, so you've got to take those profits as they're handed to you.
Paying attention to Wall Street. I know we already covered Facebook, but I just want to make sure we get our question from the chat in. And he asked for your take on Facebook, and then he said, since the weekly squeeze should fire this week and the daily triggered. So maybe is he talking about some weekly options? And I mean, on the daily chart, we know what triggered that breakout. Weekly squeeze. I think you might be referring to the open interest in the weekly options.
Okay, so weekly squeeze, and I'm not sure who asked the question, but I mean that's a term that we use. So I'm assuming that this person is familiar with our work. And the weekly squeeze, so there's an indicator called a squeeze that I really love, and it just essentially shows when the Bollinger Bands have gotten really narrow. And I just call that kind of a squeeze in volatility, and it's a compression of energy, and then that energy needs to be released. And so in Facebook, we've had a squeeze on the weekly charts for the past several months. It's a compression of energy, and it looks like that energy, the trigger, will actually be released like this week or next. And so what we found with this is that once it triggers, you typically get 8 to 10 bars of upward price movement in this case. And so that would mean that, we potentially have 8 to 10 weeks of upward prices looking at us in Facebook. Now, it doesn't mean that every day it's going to be up and every week it's going to be up, but generally, instead of trading sideways for the next 8 weeks, I would expect more of an uptrend where we could be more aggressive buying pullbacks and different things like that.
Okay, finally, you mentioned the Ambarella here. We talked about it, and GoPro. I mean, here's a stock that had a tremendous run off its IPO, came all the way back, and now it's seemingly, dead money here at this $40 level. And I know people are trying to, draw analogies between Ambarella, the strong earnings on that. how it looks forward for GoPro, I kind of look backwards and say, well, they had all the orders, the good earnings when GoPro was going up. $40 level here, not quite back to its IPO price. Could you give us your short-term and long-term outlook on GoPro?
Sure. So I think the market is very efficient about destroying everybody's dreams. And what I mean by that is that, if you're too bullish, it's gonna whack you, and if you're too bearish, it's gonna whack you. And for GoPro, what I'm looking at here is psychologically, a lot of people got in on the IPO. It had a nice run. And a lot of times, especially newer traders, they just assume that it's going to keep going up forever, and they don't use stop loss. And they will stay in their positions until the pain of holding on to that position becomes too great. So I think with GoPro, we're actually nearing a capitulation, and that capitulation will take place when GoPro actually trades below the low of its IPO range. And so I'm here. I'm looking for GoPro to continue heading lower, shake out all the last of the longs, and then and only then potentially start working its way higher. I even bought some calls on it last week for a shorter term trade because it looked like it was going to bounce, but it just can't get anything going.
Okay, we've been on the line with John Carter. He's president of Simpler Trading and CEO of Simpler Options. He's also the author of a book by McGraw-Hill called Mastering the Trade that was released in January of 2006. So you could check on that for Amazon. John, thanks a lot for coming on. Love to talk options and your approach to them. We hope to speak to you again soon.
Joel, thanks so much. Had a good time.